coming in out of Europe. NIIT Limited reported numbers. Mr. Vijay Thadani is Vice Chairman and Managing Director at the company. He's joining us as always to take a few questions. Mr. Thadani, first up, briefly, if you can give us your own qualitative perspective in terms of what happened during the quarter compared to what the few expectations we had. The numbers do look a little subdued.
Okay. I think there are a few things visible in these numbers and there are a few things which are not. So let me first give you my own perspective. I think first is this is the second consecutive quarter when we have had a nearly double-digit growth, 9 to 10%. And that has come after a very long time, after 4 or 5 quarters. As you know, we have been going through transition in some businesses as well as challenges in some others. So, given the fact that we have had 2 consecutive quarters of growth, which is much better than others, is one positive sign. The second is the revenue has grown 9% and the operating margin has also been at 9%. Our star business, which contributes 71% of the total revenues, is corporate learning. And corporate learning has grown by 25% this quarter and has had a very solid operating margin of 15%. So that, along with a very strong order intake and deal momentum that they have, in fact, the revenue visibility, which was 226 million at the end of last quarter, has now become 255 million on the back of 2 new contracts, 1 expansion and 1 extension, and one renewal. And this renewal is very significant because this is a multi-million dollar, more than $50 million visibility over the next 3 years. So that shows the affirmation of faith of our customers. So that's so much about corporate learning group. On the skills and careers, I think the visible parts are not telling the whole story. As you know, this business is in transformation. So 2 major elements, which was StackRoute. StackRoute has grown 50% year on year and has a very solid momentum in terms of new orders, etc. The second is the TPaaS, the Talent Pipeline as a Service. That, with the increased hiring in IT and banking, is also shown a very good momentum. Having said that, the enrollments have been on a growth path. The collections have been on growth path. Order intakes have been on growth path, but its effect is not yet fully felt in revenues across the board. Some of our larger centers have experienced growth. So I think we are on the right track and trajectory as far as transformation of that business is concerned. I think those are 2 strong points. We are emerging at the end of the quarter with a stronger balance sheet. Our ROCE is up, operating ROCE is up to 14.8%, net debt levels are down. So both liquidity, profitability, as well as the deal momentum is high. Maybe the subdued part of the results you are referring to is net profit, but that is caused by the forex volatility, which actually is something which one does not provide for. So otherwise, I think it's a very positive quarter.
Mr. Thadani, good afternoon. Take all your points on board. Let's concentrate a bit more on corporate learning. So last quarter it grew over 28%, this time 25%. For FY20 now, are you looking to revise your earlier guidance of 15% higher? And how much better do you think this segment can do?
Yeah, so overall, for the year, we have been on the higher side, on the upper side of 15% guidance, right? We have been between 15 to 20%. And I have a feeling we will end the year also at the same rate. And lots depends on the new orders and the transition time that it takes. So I think more details will have to be gone through for us to comment. But given the trajectory, I don't see any reason why we would not continue with the trajectory.
So $255 million is the, you said revenue, the order book, right? I mean, it's increased to 255.
No, it's a revenue visibility.
Yes.
We measure visibility as an indication of the sum of all the deals that we have. And then as we burn revenue out of that visibility, then it reduces. So the visibility has increased substantially in just 1 quarter.
Okay. And, sir, lest we run out of time, the important question on investors' mind, what's happening with the stake in NIIT Tech?
Well, it's a standard question. It has a standard answer. If you are referring to what's been going on, we've heard it as well, and you know we don't comment on such matters.
Can I press you for a little bit more, Mr. Thadani?
By all means.
I mean, is it at what stage is the process at? I mean, if you can give us any details at all.
I don't think I have any details to share, so I can't give you anything.
Okay, all right. So, not very much on that front, but it's a pleasure, sir. Thank you very much for joining us on numbers. I mean, I guess at the appropriate time, you'll have more to share on the NIIT Tech transaction as well. But the operational sort of numbers, all which Mr. Thadani put out for NIIT Limited, look quite solid. And he said the profit number essentially was because of forex volatility. But otherwise, I mean, and I think he left us with that important point. Revenue visibility has increased quite substantially in just one quarter. That stands at $255 million or so at the end of the third quarter. We slip into a very quick break. We come back with another management. Rashesh Shah, Chairman and CEO of Edelweiss Financial Services, joins in. Those numbers also came just a while back. That conversation in just a bit.